It's graduation season, and that means hordes of newly minted MBA students and undergraduate business majors will soon be hitting the workforce. But what have they learned? To find out, the Associated Press reached out to some of the top graduates around the country to get their advice about managing money and investing during these volatile times.
Investing is about growing your money over the long term, and it's only natural for the market to move in cycles. So, if you're taking that step as a college student, you're really preparing yourself for the future. You're learning that lesson early on that investment values can change in different ways, whether it's in a good market scenario or in a bad economic time. And if you're understanding that early on, you're allowing yourself to make smarter investing decisions in the future. If you start your own account, you don't have to make 100% of it risky investments. You should be saving and managing your money for the future. So, while, I may have 50% risky investments, also safe investments like government bonds and safe mutual funds. I think you really need to have a mix and a diversified portfolio. I think index funds are great because, they're already diversified and, they're a little bit easier. I think, though, when you're young, it's the time to take on some more risk than, when you're heading towards retirement. So individual stocks, while they are riskier, it's a great way to learn. The market isn't always driven by fundamental analysis, especially look at the last 2 years, a lot of it is driven by momentum and investor expectations. So if you can understand people's expectations and the catalysts that will actually move the stock prices, I think you're in a good place.